What's up everyone, it's Caddy with MoneyVest Real Estate, and in this video I wanted to break down my entire spreadsheet on rental property analysis. In the previous video, you guys seem to really enjoy and love my journey in investing in real estate here in Dubai, and in this video I wanted to break down every single metric, closing cost associated with actually buying property here in Dubai, and also the financials that I'm going to be running through, the modeling, everything that I'm going to be doing in order to understand whether a deal makes sense or not. As we know that the Dubai market has been very, very hot over the last couple of years. Prices have increased by over 30, 40, 50% depending on the area. And in this video, my plan is to share a lot of resources as well with all of you, so that it kind of helps you in your journey, whether you're investing in Dubai, UAE, or any other places in the world. The concepts obviously still very much apply to wherever you are looking to invest in. So hope you all enjoy it and find it helpful. Make sure that you drop a like and really do subscribe to the channel. We're trying to get to 1,000 subscribers for this channel, so I would really, really appreciate that. And again, a lot of the resources that I'm going over, I'll share the URLs in the description or the comments. And the spreadsheet, once it's entirely complete, I will put that on Patreon as well. That's going to be, again, www.moneyvest, patreon.com/moneyvest. You can join our Patreon and get access to this spreadsheet as well. So first things first, let's dive right into some of the actual resources. So there's a website called DXP Interact, which is one of the best resources for anyone who's looking to understand the Dubai market a little bit better. I use it on a regular basis because I'm trying to understand the transactions, the annual performance, property specs. There's also going to be, so if you go over to property specs, and if you're looking at any specific area, so let's just go over to apartment, and let's just search a quick property. So, the pad or business bay, if you hit search, what this will do is that this will basically, put together a return on investment. And this is a gross ROI, right? So it basically tells you the gross annual rent divided by the average purchase price. And right now you can see that it's 9%. Now we're going to ignore this because I've got a whole spreadsheet to go over. So this right here is actually going to be that spreadsheet here that I'm going to be going over in this full detail, and something that I've created myself. But it's just a good way to kind of analyze the market. So if you go over to Dubai property market January 2024 report, and again, you'll notice Dubai real estate market overview. These are the ready properties. These are off plan. Off plan basically means under construction. And of course, ready means that are ready to move in, ready as in furnished and ready to move in. And all transactions. So you'll notice that in January of 2024, over 11,000 property transactions happened, 11,000 sales. And of those, this right here is the sales value, 18.3 billion dirhams. And this right here is going to be villas, apartments, commercial properties, plots, and again, all the total sales volume of over 34, almost 35 billion. And this is apartment rents of 70,000. Villas, 170,000, commercials, almost 60,000. It kind of gives you a good overview, good idea, right, of a lot of the entire market here. And if you go over to transactions, so one of the areas that I'm actually looking at is JVC, right? That's the Jumeirah Village. So if you click over here, you type in JUM, you come down a little bit, that's going to be Jumeirah Village Circle. So that's JVC. You click on that. Sales, the type, right? So apartment, villas, commercial, or plot. Plots is another word for land. And number of bedrooms or a studio, and again, sold by developer or individual. Developer is going to be the developer who's actually building, constructing the actual building apartment. So there's a lot of different ones like Emaar, Damac, Nakil. There's a lot of developers here in the UAE, of course, Emaar being one of the best ones. And individual is going to be the secondary market, right? Secondary market between the seller and the buyer itself. So we're going to keep it, to all and hit search. And now it kind of shows you all the transactions that have taken place, right, in JVC. So last week, 825,000 median price, 1,300 price per square feet on a median basis, and 431 transactions, which is slightly down about 5% week over week. If you go to year to date, it'll show you how many transactions have taken place, 1,430 transactions in JVC alone, with almost 1,300 median price per square feet, and the median price being 842,000. And this right here is all the different properties that have been sold. So one of the ones that I was looking at was indeed in Bloom Towers. Bloom Towers is a property that's been built recently, and it was handed over in 2022. So fairly new apartment, fairly new construction. And when I ran the numbers, the offer that I was willing to put down for this property was obviously a lot lower compared to what the asking price was. So Dubai, I do feel there is some softening in the overall prices very soon, because there's also a huge supply that's hitting the market. So if you come over to supply, this essentially shows you the annual property supply, how many projects are currently under construction. So all units and projects to be delivered, over 585 total projects are currently under construction with 178,000 units that are going to be hitting the markets here over the next couple years. So if you come here, number of yearly delivered units, entire year, over 36,000 units were delivered in 2023. And last 5 years, if you take a look, I mean, it's just been going from 29,000, 31,000, 32,000, 33,000 to 36,000, and 2024 we've already seen 3,400 units, just under 3,500 units being delivered. So there's been a lot of supply that's hitting the market because there's a lot of demand also coming in. There's a lot of people that are actually moving to Dubai. I think the population estimates are expected to go from like 3.5 million this year to over 7 million by 2040. So in the next 16 years, Dubai's population is expected to more than double to 7 million. And I'm doing some more research on the number of jobs that are going to be created over the next 15 years, the amount of businesses that are moving to Dubai. And again, there's some other variables to consider as well, because Dubai recently announced a 9% corporate tax rate as of last year in June. And I think that's going to also affect the number of businesses that actually move here, or also affect the businesses that are already in here to maybe start looking at other opportunities as well. So there's going to be a demand and supply that definitely needs to be accounted for as you are looking at investing in properties here in Dubai. So this is actually quite concerning. That's exactly one of the reasons why I think there is going to be some softening in the actual property prices here in Dubai. If you look at the entire year, number of yearly launched properties, and 86,000 is quite significant, right? Which are not yet delivered, but 86,000 launched properties here that are still under construction that are going to be delivered fairly soon over the next several years. And in the developer market, what happens is that there is DPP, that's developer payment plans, when we're at 0% interest. You can put down 25% and buy straight from the developer for a property that's not even constructed, that's not even built, and you have to pay like 1% per month, and then they deliver you the project in 2 years or 3 years. So that's how the developer market works. But then of course you can look at ready properties that I mentioned earlier that are going to be from the secondary market, that you're buying straight from the seller of that property, right? So that's already built, and it's rent ready basically. And this right here, future property supply in Dubai per area. So this is one of my most important indicators that I look for. And JVC is at the top that I mentioned, Jumeirah Village Circle, right? JVC is at the very top. Then we got Business Bay, Damac Hills. We got Dubai Marina. Dubai Marina, I just went today. I looked at a property today that was listed for around 850,000 dirhams. And the rental yield is around like 4.5% on a net cash on cash. I'll go over that in just a minute. And these right here are all the different areas where the supply is going to be coming out. So JVC, there's a lot of supply that's going to be hitting the markets fairly soon. So that's one of the things I'm a little bit concerned about. Not going crazy, but just really looking at where the prices makes most sense. So now going over to my spreadsheet, okay? Now, this is not complete. I will be, kind of making this spreadsheet available for all the members in our Patreon fairly soon. And the the analysis remains the same, whether it's for the UAE market or any other market for that matter. The analysis, the fundamentals of this are going to be the same. So what I have over here, first of all, I list down the actual building name. So this is an example of a property that I saw in Parkview. Parkview is, again, in JVC. Parkview is the name of the tower. It's a building, and again, it's located in JVC, Jumeirah Village Circle. So the purchase price, in fact, the seller was asking for 600,000, right? This is the number. This is the actual amount that the seller was asking, and this is all in AED. Now, to give you some perspective, $1 is equal to 3.67 AED. So that's the conversion rate that we're working with. So basically, if it's 600,000 AED, we're looking at this divided by 3.67. So we're looking at about 163,000 US dollars, right? This property that was listed for. Again, prices are quite reasonable. It's a studio, so it's not a one bedroom. It's a studio with about 470 square feet, right? So that's the square footage. And this is something that I really want you guys to understand, is a service charge. Service charge is very similar to an HOA, homeowners association, where the buildings association or the property operator charges this amount, and then they make sure that the trash is collected, elevators are working, all the amenities are taken care of, like the pool and the gyms, and just the building upkeep, right? So that's what they charge from every apartment owner, and that service charge is on a per square footage basis. So for this building, it was 13.5 AED for every square footage. So square footage 470, so total was 6,345 for the entire year, right? So 6,345 for the entire year, because this is per month on a per square footage basis, right? So 6,345, this is simply taking into account this 470 times 1,350 for the entire year, and then you divide this by 12 is how much you actually pay on a monthly basis, which is 528 dirhams, which again, this divided by 3.67 is going to be about $144, which is pretty standard, right? $144. Think of it as an HOA, Homeowners Association, $144, and this kind of takes care of all the amenities, the common areas, the security, the pool, the gym, the trash, building upkeep, elevators, all that stuff. So that's the service charge that I wanted to go over. And then, of course, the closing cost. Now, closing cost in Dubai is quite high. I'm accounting for almost 8 to as much as 9%. Of course, when you're working with higher numbers, that percentage is going to be lower because let's say that you are working with, a million dirham property. So if you put in a million dirhams, it's going to be closer to 8.1% versus the previous one, which is almost at 9%, right? So you're paying 80 basis points less. The higher you go up in the purchase price, the lower as a percentage is going to be for the closing cost. But it's still going to be higher in terms of the dollar amount because you're working with the higher numbers to begin with. So closing cost is quite high in Dubai because these are all the closing costs that one has to account for. This is what I have kind of created this list. So we've got the DLD fee, which is probably the biggest one. This is the Dubai Land Department. Now, the type is going to be over here, right? So type meaning whether it's a government fee, it's a bank fee, or it's a agency fee or real estate fee, or some lawyer fee or paperwork and transaction or admin fee, right? So these are all the types of different fees that you can kind of consider when you're buying property here in Dubai. And this is, I think it's a pretty exhaustive list. I haven't, I've kind of gone through a lot of different deals and talked to a lot of people, and this is about as exhaustive as it gets. Of course, if you're buying cash and if you're not taking on a mortgage, you can kind of remove all these banking fees because you're going to be paying in cash and you can close a deal sooner. But if you are taking on a mortgage, then of course you have to account for this banking fee as well. So DLD is the biggest one, which is the Dubai Land Department. That's where you kind of do the transfer and that's where you register your property, and that's a government fee, 4% of the property price or the purchase price. Basically, that's 24,000 based on this particular example. Mortgage registration, which is the banking fee if you're taking on a mortgage. Mortgage release fee, I haven't seen that right now. Title registration, so again, that's a flat fee of 580 dirhams, government fee. Transfer center or trustee fee, that's going to be 4,200, also fixed. It's a government fee. Basically, it's a transfer of the title and then the registration of the title. Bank processing fee over 4,000. It's like I think it's a percentage of the entire purchase price. So I believe that is based off of the actual purchase price, yes. And that's going to be around 4,000, depending on this example here, 600,000 property. Property valuation. Now, this is also interesting that I want to highlight here because the bank itself does a property valuation. Now, if they do a property valuation which is below the agreed upon price, then they're only going to be financing whatever 60% of that valuation of that property, right? So in Dubai, it's a pretty even split. It's a pretty split of about 40-60, right? I think on the first deal, you can do 20-80, 20% down payment, 80% financed, but that's only on the first deal. On the consequent deals, you have to put down as much as 40%. So that's another reason why I believe that Dubai market is a little bit safer compared to the US or European counterparts, because in the US and Europe, you're buying property or your real estate as much as 0% down, right? There's even instances where you're not putting anything down, 0% or 3% down or 5% down. So 95% or 90% of the property is financed, right? So LTVs are really, really high. You're taking on too much leverage to buy a lot of property or buy a lot of real estate. In Dubai, it's a lot safer because, most of the properties are either partly owned, half owned, or fully owned by the owners, right? So banks are not taking on as much risk because they're only financing 60%. So 40-60 is the split. And when they do a property valuation, so for example, let's say that they value this property, Parkview property, at 500,000, right? So they're only going to be financing 60% of that 500,000, right? So that's 300,000 dirhams. So if you're buying it for 600, the bank valued it at 500 and they're lending you at 60% of that 500. So you need to pay up that difference, right? Whatever the agreed upon price is, you have to come up with that difference. I think it's very similar for when the banks actually do a property valuation, real estate valuation in the US. And there's also an inspection that needs to be done. And that's where the real estate inspector kind of comes back with, okay, this is what the fair value is for that property, and if it's above or below whatever the agreed upon price is, that's how the adjustments are made. Real estate fee or agency fee is pretty standard, 2% that you pay to the broker. That's a broker fee. And then there's also a conveyance fee, which is essentially taking over all the lawyer and the paperwork. And there's a third party that actually works with you to oversee the entire transaction. And all the documents are in order. If there's any specific clauses that need to be added or removed, you can do that. You can work with them, and they are going to help you with that as well. Because in my particular instance, when I was looking at a couple of properties here in Dubai, I wanted to put down a clause where a lot of these offers are subject to financial pre-approvals, right? Financing approval, because right now I'm not approved for financing yet. I'm going to be approved in March, right? So March first week is when I complete my 6 months here in Dubai, and there's one bank, Meshreq Bank, that's going to be able to lend me at a low doc sort of policy, and the rates are going to be a little bit over 6%. I'm going to go over that in just a minute, but that again is the lawyer and the paperwork, and you got to make sure that the clauses are in place, and all the work, all the transaction is being overseen. Now we come to the fun stuff, right? You've got the purchase price, you've got the closing cost, which is a combination of just sum of all these different fees broken down by government and the bank, and that's going to be the percentage of the overall purchase price, almost 9%. So your total purchase price comes at around $653,000 for this particular property, Parkview, which I'm going to show you in another video. We'll kind of do a walkthrough. I took a lot of videos and pictures, so I'm going to walk through that in a different video. But this is simply to run the numbers. Now, this property is already rented, okay? There's already a tenant in there. I actually met with a tenant, super nice guy. He's been living there since October of last year, so his lease actually ends in September of this year. September 2024 is when the lease ends. And he's paying $50,000 per year. That's the gross rent, so that the gross rent is $50,000, right? That's how much he's paying per year. This is not including utilities. This is the gross rent that he pays you as a landlord. And he pays on top of that the utilities, right? Whatever the utilities are, I think he mentioned $600 per month. So that comes out to around $7,200 per year, right? So that's how much he's paying in utilities. So basically his total expenses are $57,200 that he's paying between rent and utilities. But we're only going to account for obviously the $50,000 that he's paying for this property as gross rent. So 50,000 divided by 12 is essentially 4,166. So that's exactly what I've plugged in terms of gross rent. And I've broken this down into like 4 or 5 different categories. 3 of them are financed, 2 of them are cash, to get a better idea, better understanding of, okay, what is going to be the deal looking like. So gross rent, 4,166. That's how much we're working with. The term of the loan, the mortgage proposal that I received was 25 years, and the rate was quoted at 6.25%, but that's fixed for 3 years. And then after 3 years, it is going to be 2% plus the EIBOR, the IBOR. And roughly, I was told that it's going to be around 6 to 7%. So just to be safe, I plug in 6.5% here, 25-year term. Gross rent, 4,166 for now. PMT is the payment. This is including mortgage and interest. It's all automatically calculated. So this is going to be a formula that's already calculating the 25 years and what's the mortgage payment. That comes out at 2,430 dirhams. The HOI, homeowners insurance, very, very important. It's essential to get that. Of course, I've plugged in 200 per month for homeowners insurance. Service charges, as I already mentioned, these are the service charges, 6,345. So this 528 is essentially taking into account this annual number divided by 12. So that's the monthly HOI, monthly service charges. Now, this right here, the CapEx, which is capital expenditures, repairs and maintenance, property management, and vacancies. This, you can, in my model, I've kind of included them and also not included them, and I'll give you a reason why. Because in Dubai, a lot of the properties are fairly new. A lot of the constructions are like 2-3 years old. Very rarely you'll come across a property that's over 20 years old or 10 years old. A lot of them are fairly new constructions. So they don't really need a lot of capital expenditures, especially not right now if they were just handed over a couple of years ago. Repairs and maintenance, I think it's wise to create a budget for repairs and maintenance, because if the tenant does any damage to your property, of course you can take a little bit out of their security deposit, but if it's a bigger damage, then of course you need to kind of account for some repairs and maintenance, whether it's minor or somewhat moderate, that needs to be accounted for. Property management, I think that's something that needs to be accounted for, because as you are growing your portfolio, as you're buying more and more real estate, you're not going to be able to manage all the properties by yourself. So that is basically 9% of the entire rent that I'm accounting for, 375 dirhams per month, which comes out to, I think, over 4,000 per year, which I think is reasonable. And then vacancies, 208 dirhams. Now, I'm not sure if I need to account for this or not, because I guess maybe I should, given that there is a possibility for the property to be vacant at some point. So there needs to be a budget for vacancies as well. But also in Dubai, there's a concept of paying in as few checks as possible, right? So checks as in when the tenant makes the payment, they write you a check. I know, it's pretty crazy. They write you a physical check and they date them in a way that you can kind of cash them. They already give you all the checks for the entire year, and they future date them, that you can cash them when it's time to collect rent. So whether the tenant pays you in 3 checks, 4 checks, 5 checks, 6 checks, the vacancies obviously you can account for or not, depends on how conservative you want to be. You know me, like I'm going to be super conservative in the analysis that I do. So vacancies, I'm accounting for about, I think, 5% of the entire rent. It's going to be putting away in an entire like sort of separate account where I'm just kind of creating this budget for. And utilities don't need to be accounted for unless it's an Airbnb, which I'll go over later in the video as well, for which you also need a license. You need a separate Dubai tourism license for short-term rentals, and that costs you about 300 dirhams, which again, I'll cover in a separate video. There's too much to go over right now. So once you've accounted for all these expenses, right, this is basically an expense sheet, right? You're essentially accounting for all the expenses to own property and have a property here in Dubai. So at 600,000 purchase price, right, with a 40% down payment and all the closing costs accounted for and all the expenses accounted for, the net cash flow for this property was a little bit over 6 dirhams, right? That's nothing. That if you do the math here, this divided by 3.67, that's about $1.82 per month. So net cap rate flat, right? You're breaking even, you're not making any money, and net cash on cash also 0.03%, practically nothing. And the gross cap rate 7.65%. The gross cash on cash is essentially accounting for the gross rent divided by the total cash upfront investment of 293,000 dirhams, and that's about 17%. But the net cash on cash is accounting for the net cash flow after accounting for all expenses divided by the cash that you've put up front, which is your purchase price, the 40% down payment plus the closing cost, comes out to almost 294,000. So that's a little bit over 0.03%. So this deal does not make sense. Now, I also wanted to run through this example because over here you'll notice that I'm accounting for the main essentials, which is the mortgage payment, the homeowner's insurance, the service charges, because you can't ignore these 3, right? You have to pay for these 3. But the other things, of course, there's some flexibility. Like I said, a lot of these buildings are fairly new. Constructions are fairly new, 2 years, 3 years old. So CapEx wise, I don't think they're going to require a lot of work, big expenses, but repairs, maintenance, yes, I think there needs to be something that needs to be accounted for, 208 dirhams, which is about 5% of the gross rent. Property management, I think that needs to be accounted for as well. And vacancies, again, I think that needs to be accounted for as well. Utilities, nothing. And now we're looking at just under 1% in net cash on cash. So that's the number that we're working with right now, and cap rate of just over 43 basis points. So what do we need to do to make the numbers work? There's 2 things that are under our control. We can either look at reducing the purchase price. So the offer that I put into this property first was 550,000. So I reduced it by 50,000. So look what happens to the net cash on cash, a little bit under 2%. But the thing is that we also need to account for the IRR, right? That's the equity pay down, because the tenant is paying the property for you, right? So if you take a look at the 4 big benefits of owning real estate, the number 1 benefit is the equity pay down, right? The tax benefits, property taxes are 0 in Dubai, right? And then of course we've got cash flow and appreciation. Capital appreciation, very, very important for real estate. Of course, you want the property value to increase, and cash flow is another really important benefit, which is to say that you are at least netting something at the end of each month. So you need to work with a few numbers here, and that's exactly the whole idea of this model, is to work with the purchase price, work with the gross rent. So look what happens if you raise the rents next year to 4,500 per month. Now we're looking at a net cash on cash of over 3%, cap rate of 1.5, and we're netting about 688 dirhams per month, which again, if you do the math, we're looking at around $187 per month in net cash flow, right? That's exactly what we want to see from this model. So I think that's more than enough information for the first video, going over this entire spreadsheet and a couple other resources that I wanted to share. But hope you guys enjoyed this video. I'm going to be doing a lot more detailed analysis into all of this, but definitely do subscribe to the channel if you haven't already, and like this video, and I'll see you all in the next video. Take care.